Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Thursday, May 4th, 2023. Before we click through all the charts, just want to ask you to please click like, if you would, each and every time you watch the Tesla report. It helps us out a great deal in being found on YouTube, and become a Wicked Stocks YouTube channel subscriber. You'll be provided notification each and every time we upload new content. That includes the daily Apple and daily Tesla report. We also have wickedstocks.com, where we offer a full assortment of subscription-based analysis, including the daily Triple Q report, the daily SPY report that you never see really here on YouTube except once in a blue moon, and weekly analysis in the S&P 500, NASDAQ 100, the long bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. Anyway, here we are, big picture, long-term resistance, well above the market, 220.62. Will we see that area in the coming month or two? We may well. As long as we continue holding above what had been a targeted support level that we tested about a week ago, now at 151.75. This channel bottom is part of a range down to 146.06 that can absorb selling into June. And from here, this market can recover nicely into the low 200s, whether it's the 200.23 channel top or that 220.62 long-term channel top. That 200.23 is, by the way, on the weekly chart at 198.17. That area all descending and gradually narrowing. And in reach over the next, I'm going to say by the end of June or sooner, above 151.75. On the way up, I've got 169.57. This is sort of the 1 to 2 week time frame for you 3 to 5 day swing traders. It really is buying 151.75, taking profits at 169.57, dropping daily, even going short at 169.57, taking profits at 151.75. This is the framework into next week. Now, I consider the channel bottom at 151.75 to be more significant, and above which the low 200 area in reach by the end of June or sooner. And so if we were to close over the next few days above 169.57, no good reason to be short the market, whether that means you're short the stock or you bought 151 out of the money puts, for instance, then you'd want to liquidate that and go long, reaching for perhaps 198 or 200 out of the money calls that don't expire for at least several weeks. In fact, I think, once we tested the low 150s and we are still above it, you could reach for 200 or 220 out of the money calls right now that don't expire for at least several months. Closing above 169.57 should present a sigh of relief for you, because I think we're then only 2 to 3 weeks away from reaching what I consider to be targeted midterm resistance at 200.23. And so that is the big picture. Let's talk about, the day itself. I'm going to show this chart here, 164.42. I just have it as a minor point. This underscores the fact that all of the minor points are carefully chosen. This has meaning. I struggle with whether to call this an upside pivot point today, in terms of an intraday pivot point, but I'm just going to leave it alone. 164.42 can contain intraday activity. If we push through 164.42, expect at least 166 even, possibly 169.57 intraday. And now downside, I think, has more reliable pivot point qualities. I say that very carefully at 159.57. Nothing more than a 4-day channel bottom that we've been trading above really for the last couple of days. It can contain intraday weakness. And yes, above 159.57, we could test 169.57 on an intraday basis. That would be a pretty decent rally, but I think it is possible. Holding above 159.57, the market is stable and can muster a sort of a bullish dynamic as we move into the later part of the day. 169.57 attainable intraday, where once again we can top out into next week and from there fall back into the low 150s again by the end of next week. Finally, closing above 169.57 does signal a good low for the month of May. The next 2 to 3 weeks then likely to reach this low 200 area where we could actually top out on a monthly basis, possibly longer. Now, downside today, breaking or opening below 159.57 should yield 151.75 intraday. And I say should yield. I kind of want to say allow. I mean, after all, we came off this long-term support area. I don't know if we'll retest it today, but I will say if we break or open below 159.57, day traders can play the short side, even if it's only for a couple of points down to 157.38, or for 5 or 6 points down to 153.60. But yes, 151.75 attainable today if we break or open below 159.57, which is our intraday pivot point you can see here. So that's really for day traders, 159.57. Above which, a stable dynamic for the day, 169.57 in reach, perhaps. Below which, 151.75 in reach, perhaps. 151.75, the start of a wide yet gradually narrowing zone of meaningful support down to 146.06, a 5/8 downside Fibonacci from that January low against the February high. This zone, once again, able to contain selling through May into June, and now that we've tested it, the market poised for recovery as we move into June. Closing above 169.57 should set off follow-through buying into later May. Now, if we were to close below 146.06 today, I don't expect it, but I must tell you that I do think the very low 100 area would become our next 3 to 5 week target. If we close below 146.06, that 101.81 January low, then likely within 3 to 5 weeks, where we could actually double bottom on a monthly basis. I'll also say this, and I've said it once before, we've tested this channel bottom, have not closed below it. If we close below 151.75 by a decent margin, and by that I mean, a 151 even or lower, I'm just kind of throwing that number out there. The low about a week ago was 152.37. So yeah, closing merely below 151.75 is a cause for concern. And so if you reach for the 200 out of the money calls, or you're long the market right now, you don't have a strong argument from me in terms of liquidating that long position. But whether you then aggressively play the short side, you also don't have a strong argument for me. I just want you to know that I don't see this market showing sort of a sustained descent as we move into later May and June, unless we close below 146.06. So, whether, you buy 103 or 101 out of the money puts with a settlement merely below 151.75, or whether you wait for 146.06, I could see going either way. I'll let you obviously make that choice. And I do think I pretty much said it all for Thursday's Tesla report. Please click like, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Friday, so you have a great day.